Hey there, welcome to the channel. So today we're going to look at what happened in the market today. Kind of it got to be a little bit of a bloody day. So looking at the SPY here, I kind of drew this kind of trend. We kind of had this channel going on here. And then if we zoom into what happened today, you can see that trend line, and we're kind of really right at that trend line. We're really at risk of kind of breaking through there and breaking out. We're kind of below the 50-day moving average. We're still above the 200-day moving average, but we're really kind of getting to that point where hopefully we'll see what happens. But gosh, there's just all this selling and all the small caps and stuff is finally just broken through to the big caps, I guess. So there we go. Looking at the XLV, this is one that I have a little bit on, and this one also as well is kind of like hanging on by a thread. It's like just barely hanging on to that. And the problem is, like, if is this like a big top and everything? I mean, I don't know, and it's really hard to say, but I just, I don't want to be in that position where you're just like, okay, you sell a bunch of stuff and then you have no position, and then all of a sudden it starts rocketing up again. So as long as I'm above that kind of trend line, I'm just going to try to hold on for a little bit and see what happens. But if we start breaking that trend line too much, then screw it, I'm going to probably dump these positions. Now the bigger picture, I think, looking at the yields, looking at this. So basically the yields went up today, and I'm looking at the weekly chart here. So it didn't go up 5% one day. It was like the weekly, but we can see that we've broken above this like 1.75 region here. And so we're coming, so that's what they're talking about. This is the pandemic high rates, because this was the pandemic here. And basically, now we're breaking out above that. And the next resistance is right around this, just under 2%. And so we'll see what happens. But it definitely, if the Fed's going to raise rates, look, it's very simple. If the Fed's going to raise rates, then we're going to, rates are going to need to go higher. I mean, there's just really no way around that. So if that's just what it is, right? So we'll see what happens here. Little smiley face there. Woohoo! So rates are, looking like they're breaking out. Now we'll see if in this 20 range, 2% range, whether they meet a bunch of resistance here. And maybe that will just kind of have it stall out there, but we'll see. So, I mean, it has to be expected. If the Fed's going to raise rates, then the rates need to kind of go up to match it a little bit. So I don't know why people are surprised, but of course it does hurt. This affects everyone in the economy, your cars, everything like that. Now, looking at the weekly IWM, see this guy, had more selling today, and man, it just looks really sketchy, right? Because you look at this thing and it's like, okay, it's gone nowhere for a whole year, right? This whole period of time, it's gone nowhere. Boop, boop, this whole period of time, gone nowhere. And, you had this breakout over here, tried to break out and just got smacked down right there. And now look at, you're right there. You're right on that 210, 205 area where, look, there's very little support all the way till down. Basically your support would be down somewhere in here, right? So you're you're in this situation where if this thing breaks through here, then your next support is really down at 165. And it was really interesting because I was looking at the components of this thing, and the components are at all-time highs. Of many of the components are at all-time highs. So in a way, it's like you could kind of see how this actually could finally break, because some of the components, like the top 5 or 6 components, were like pretty overextended from the moving averages. So that's kind of where we're at. I mean, we'll see, but that's not really a good sign there, because the small caps cracking would not really be great. And then over here, as I was talking about the other day, I mean, do we have this little death cross? Could be. We're really close on the 50 crossing back over, but that kind of stuff doesn't, it doesn't, those kind of things like, oh, the death cross or the golden cross, if the 50 cross the 200 on the way up. So here would be golden cross, like, oh, it's a positive sign. And it was, right? If in that area, it's like, oh yeah, this thing is breaking out of bases, and boom, it had a nice move. On the downside, well, yeah, it could be an issue. So Looking at the Qs today, down 2.4%. It's funny, the bar doesn't look that bad, but it would definitely had a down day. Now, the reason for that is, it's kind of one of those things. It's not a super bad bar, but the problem is the gap. It had closed up here at this 380, gap down, and then continued down to 370. So that's why it was, such a significant percent down, and then 1.7 on that, on the SPY. And so, yeah, so definitely, I guess, I don't know, the market spooked or whatever. So it's kind of in that thing. But one of the things to note is like USO here, it's kind of just like the oil. And we can look at the West Texas Intermediate crude as well. You can see the oil is really moving up. I mean, this is quite one heck of a move here. It's gone from, 70 all the way up to 86 in like a month. So it's really moving up. And then the big picture for this thing is, yeah, we're in definitely kind of an uptrend. So one of the things with the oil, oil is a commodity. The whole economy runs on oil. And I know that, like, if you're an environmental person, oh, that's, blah, 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 blah. But, the reality is the economy still runs on oil. So oil spikes, definitely, that can put a damper on the economy because that is the input cost. It's a big input cost to everything. So we already have an inflation problem. So if you think about it, we already have an inflation problem. And on top of the inflation problem, now we have oil going up. So you have prices of energy going up, but all this other stuff from cars to food, all this other stuff going up. And now you get the stinking oil is really, picking up too. So, oh my goodness. And then just checking the dollar. Now the dollar, had a couple of days of really heavy volume moving up. But, big picture, the dollar kind of pulled back and been static, but, you have this big base, so, and the moving average is turning up. So, kind of, it's like the dollar, that milkshake dude, Brent Johnson, it could be that, this thing, I mean, because this is a longer term 2-year kind of base thing, it sort of looks like that could be it. So, yeah, kind of a mess out there. I don't know if, the selling's going to, abate or not. I think that, let's look at some of those high beta stocks. Let's look what I call the Meet Kevin stocks, the kind of stocks that he loves to look at. So see today, like Enphase didn't go down too much, 4%. I mean, after you have days like this, where you have like, if you're like a Meet Kevin like fanboy and you got this, and I'm a fanboy, actually, I do like the guy. There's a lot, he provides a lot of good information. So more power to him. The only thing I worry about the Meet Kevin guy is like, he hasn't really been through a really big market crash. I mean, the one in this 2020 at the start of the cerveza sickness didn't really count. They patched that together really quickly. So, we all have to learn. We're all going to have to go through something like a 2000 or a great financial crisis. It's going to happen. Just the question is when. So if you look at this guy, this down a little bit more, destroying support and all that stuff. If we looked at other things like, but you can make the argument that, it's not going down as much. And then Neo and Phase, let's Teladoc, let's look at some of the, look at just kind of just continuing to go down. And then ARC K, let's look at what's her name's doing, continued selling in this thing, another 4%. Man, it's just, and it's funny because I know that the Kevin dude was like talking about how, yeah, you would just short this stuff every day. And I don't know. I mean, maybe you would, but I don't know. I mean, it's a lot of this stuff is really overextended, and therefore to be like, shorting it, I don't know. Is it more of, people are like, let's look here, firm, down, wow, 7% today. But see, here's the thing. See, and this is what, I trying to point out here is that, a lot of this stuff, a lot of these, the Meet Kevin kind of stocks, they've gotten the crap kicked out of them. Look how far this is. But look at now, it's getting into this area here where there's a lot of support, so if people are shorting this every day and they're pushing their shorts into this support, they could really have a hard time of it. So that's why it's kind of like to pay attention to this stuff. It's a good thing because, you look at this, there could be some opportunities, but what you really do need something. You need the arrested development of the fall. The fall has to stop, and you got to get some kind of basing in before you can put a move up, so maybe we'll see that. And it's probably not going to happen quick, but it could happen, in the next few months, because how much more are these going to go down? There might be a rotation to other things going down. Bank of America, now did they report today? So yeah, I think they reported, and we had JP Morgan report earlier in the week. Yeah. And so all these guys have been getting beat up. Now, I had made this comment before. I'm like, talking about the financials, like I was looking at the basically, on the weekly XLF, the financials. And I'm like, okay, why did XLF break out? So if you look back here, it's like we had this breakout. So here was a high, and you had this breakout, but now it's really failing. And it's really kind of interesting. Is the market finally picking up? Like these banks, like Bank of America, JP Morgan, both had kind of somewhat poor earnings. So is the is the market finally picking up that, financials may actually not be in a good position if we're raising interest rates? It may not be a benefit to them. So I wonder, and I don't have the answer, but that's something to think about. Is the market kind of picking up onto the fact that, maybe financials aren't going to do well over the next year? That could be that's what I'm starting to wonder. And just like in IWM, like end of last year, you notice how it had this breakup, and then bam, 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 it had 4 weeks, this took it all away and more. So I wonder if something like that is brewing for the financials. So that's something I keep an eye on. And from my perspective, which is not financial advice, is that, hey, the banks, any kind of cutback in increasing rates, cutting back on the security purchases, mortgage-backed security, all that stuff just will reduce economic activity. So here you had an interesting one, 3.6% on Carvana. Now it's getting beat up. Now look at it. You have this Carvana, you have SFT, you have these these new companies, new ways of selling cars. It's all crap. At the end of the day, if people don't have money for freaking cars, they're not going to buy cars. That's how it works. Like when you look at, auto dealers and car makers, in a recession, they are a luxury. They are not a consumer staple. They really fit under the consumer, instead of staple, consumer discretionary, because you don't have to buy a new car. You can keep your one running, etc. Oh, let's see, DocuSign. I must say that I am kind of amazed at how far these are going down. These get beat up, and then look at DocuSign putting in new lows. You would figure after that big beating, it would, just run out of. But, is it people shorting? You don't know. But more likely, it's like bigger funds that invested in this thing that got caught, and they're still trying to find a way out. When like, look at this thing, you're still selling, you're down 6% after you've been down like 80% or whatever. You were like peaks almost 185, and you're at 35, and people are still selling it. Now, are they shorting it? Well, maybe, but it's a risky place to short it after this amount of time. Who's left in there? This is more likely, it's probably funds that are like, I've been hanging on, and like they believe in the company, whatever, but they're just like struggling to just, because they're really going to get to that initial IPO price. And another thing, if you were in this IPO thing and you were in this range somewhere, and you had a profit all this time, and you were hanging on long, well, you would have maybe lost depending where you were. Now you're getting kind of sketchy over here, possibly. So Matterport, what is this guy doing? Down a little bit. But here's the big thing with these guys. When we look at all these like Meet Kevin kind of stocks, what we want to look at is we want to look at a little bit bigger picture. What you want to think ahead to is, if you read books by Boink, this guy, like big stocks and how they run. There's all these books like this study, like the stocks that really ran in the 2000 bull market. And this was, the late 90s bull market that terminated in the 20s. And see, what happens is that you have winner stocks. So let's look at some of our winner stocks. You have like Tesla. This has been a clear winner stock, or Apple, right? And the thing is, now Apple is one that's been in multiple of these cycles. They've had the crap kicked out of them before. So don't like, I'm funny. I had a friend that bought them at like $3 or $8 or something like that, because he was like, we believed in them and loved them. And that was in the 80s when they were actually almost went out of business. But the point is that many of these companies, they may not really participate in the next cycle. So if this is a really big cycle, you know, if this ends up, and I can't say that it is, but if this ends up being a big cycle of euphoria, blah, 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 and then it comes back down, some of them will come back around and go back up, but others will just come down and never come back. And there's several things, like you can look at like lots of companies from the tech boom that never came back. Even things like, I think like Cisco, a lot of these companies may have come back after a decade, but a lot of these leading companies, it took a long time, and then many of them just went away. So that's the other thing that you want to kind of keep in mind. If you're thinking like, well, okay, this selling will stop, and this company's going to do great, and I want to own it, so blah, 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 and that's all good. But, you know, this company may not exist. Carvana may not make it through this, you know, because, you know, they come down to here, and then if they come out the other side and their sales aren't that good and they get competition. I mean, this is funny, like these Carvana shift, I don't really get it. I don't know. Like, okay, yeah, it's a different way of buying cars. People don't like dealers. I mean, buying cars from dealers, you know, the guys, usually some old dude smoking that's like, just like, oh, I don't want to deal with this guy, you know, because they're all just like, are you ready to buy today? Or you call me back when you're ready to buy. Like, oh, well, screw you too, sir. So, yeah. So, and that's the thing, like Lemonade as well, you know, do they have a moat? You know, that's now you can start asking a question like, do they have a moat? Did they come up with a different business model that has no protective moat? What's preventing all the existing insurance companies to do what they do? I don't know. And that's what you may realize only after the fact, you know? And so once again, the big picture is some of these companies may not come back at all. And so if you just sit on them, and this is the fundamental problem with this conviction, this concept of having conviction in a stock, the fundamental problem with that is that you could really be wrong, and the company may not be able to deliver on all the promises. And if you hang on to it and you suffer through all that, you get yourself in a sling. Neo, great example. Maybe it'll never, never materialize. I mean, you go through a 10-year situation where it looks like it's going to materialize. Maybe they never actually produce and sell enough cars. Who knows? I don't know. But all I can do is like trade on a chart and be like, oh yeah, death cross. Maybe I don't want to be in it, or I want to reduce my risk and reduce my exposure. You know, that's all you can do, is you can do the technicals. Now, the other side of the technicals, though, kind of keep in mind, is like a lot of people are doing, they'll do like RSI. They'll look at the RSI and like, oh, oversold. Well, it doesn't mean anything. You know, I mean, a lot of these indicators, you have to understand what the indicators are doing, and they mean something, but they're very, very short term and they're not reliable. You might have like RSI and you might be like, oh, when it's above 70 or above 90, then you sell it, or it's below 30, or, you know, you buy it. And it's like a lot of that stuff, those systems like don't tend to work very well. It might work 50% of the time. And then if you're making bets on those systems, then you're losing money. Yeah, like you can make profits in trading, like losing 50% of the trades with proper money management. You could probably make ahead, but you want to try to get your hit ratio, your success ratio up. You want to cut your losses earlier and let your winners run longer. So you have to have a money management strategy with that. And so that's always the other side of the coin. So that's why I look at like weeklies. I look at big picture stuff. So I'm not sitting there trying to micromanage micro patterns in the thing, trying to figure out, you know, micro patterns and crap, you know. And like, you know, okay, Spotify. So, okay, great, Spotify. So they had this, they got Joe Rogan. They're probably a great company, whatever. But like, okay, they're just a media company. So would you buy Time Magazine or Warner Media? I mean, maybe not. I don't know. But, you know, you have to kind of get away from, you have to get away from believing that companies, just because they have a new business model, that if that doesn't necessarily mean anything. If they have a business model that does not have a moat, aka Berkshire Hathaway, that guy, Warren Buffett, like if they don't have any kind of defensible moat, like in terms of defensible moat, like Tesla, actually, you can make a reasonable argument that they do have a moat because they're in a relatively new technology. So it kind of cuts both ways. They're they got a product people like, etc. Their manufacturing is getting better. They're working very well on improving that, so they are getting an edge. There's stuff they're doing where they're basically stamping out the rear quarter of a car. I mean, there's going to come a day where the entire frame of the car will be a two-piece frame, and they're gonna and just keep working on that. So if they do that, so if you're a new person, new company, you come in and you have to add an extra bolt together and weld an extra 1,000 parts, even with robots. Is it better to not have to do that and just injection mold the whole thing with steel injection molding like we're doing with those huge machines? So on that end, the sales end, I would think like the Tesla end, they really have to improve customer support is what you hear. You hear too many horror stories of like, gosh, you just can't get your car in for service and stuff. And you got to make that better. And that, of course, is a consequence. That is a consequence of the fact that they don't have dealers, right? So if you don't have dealers, well, you got to have enough repair places all over the country. You can't just sell. That's where dealers help you. Yes, you have to give up profit for that, but they can do a lot of the stuff for you to give customers a better customer service. So I don't know, but the point is they do have a moat. They do have some kind of a moat. But if you're a neo or a new person coming in, okay, you have money, you have investors, you have all this stuff, but you still have to figure out, you're still at a disadvantage till you get to the same place that they are with their manufacturing. And if they can keep their manufacturing moving, then they can stay ahead of you. It's like a game, it's a race. If we look at, companies in chip semiconductor areas and stuff like that, it's like, okay, you have like an Intel, for example, and this guy, do they have a moat? Well, they do, right? They do have somewhat of a moat because there's this semiconductor manufacturing, very difficult, very expensive, billion-dollar fabs and everything. But in spite of that moat, TSMC has, created a situation where all these other fabless companies can like really outperform. So now you have a situation where basically Apple, Qualcomm, NVIDIA, AMD, all these other companies can get chips at more advanced chips than Intel can produce from TSMC at a better price, the whole deal. And so therefore, all this extreme competitive advantage that they had and all this moat that they had kind of dissolved due to competition. And so, of course, that's the risk with like a Tesla. Like, okay, well, maybe these other companies are rapidly going to figure out how to outproduce them, outmarket them, create a better product with better support. The answer is I don't know. I'm not predicting that. So big picture is you want to understand that the stocks that are participated in this cycle, this is looking like it was a cycle. And the stocks that led this cycle may not lead the next cycle. And so if you're in something that has gotten the guacamole kicked out of it and you're like, it'll come back, the dang well possible truth is that it may never come back. It may never. So that's something to keep in mind. Okay, that's all. Bye.